Hey guys, welcome back to my channel. So about 2 days ago I entered a couple of trades, the one I showed you guys, and after that I entered one more trade. So I'm gonna show you how those trades went. So as you can see, my account is down a lot, which most likely means I lost money in those trades. So the trades I took, the two USD CAD trades from last time, the GJ trade and the USD JPY trade. As you can see, I took the USD CAD trade for a sell, a GJ trade for a buy, and a USD CAD for a sell. So yeah, I had a really bad week this week. So I'm just gonna go over why that happened and what I took from it moving forward. Pretty much what happened about 2 days ago was when I took the losses on the first time I tried that new strategy. After I got stopped out on the previous one, I entered again because I believed that the pair would start selling. But unfortunately, I was wrong. I was so early on the trade and I got stopped out. And then I saw an opportunity in USD JPY, which is this pair. So I took a buy entry on that. But as we saw, the trade ended up not going my way because I was so early in the trade. So pretty much what happened there, I didn't fully catch that, but I was pretty much trying to revenge trade. So pretty much what that is that after you take a couple of losses, you try to put in more trades just to win back your losses. But that is literally one of the worst things you could do, because now you're trading with your emotions and you're not thinking critically. And once you start trading with your emotions, that's when everything goes completely wrong, because you're not thinking critically enough anymore, which means that you're more likely to have losing trades because you're just trying to gain the money you lost back and everything. So although I didn't realize it at first, that was what I was kind of doing. And even though the trades I was taking were still valid and it was backed by some analysis, I was also kind of revenge trading at the same time. And once I realized that, I just stopped trading, took a break from the markets, and I just took a 2-day break. I didn't really look at the markets or look at anything, just to cool off my head and just forget about all the losses and forget about everything and just try again next week. So pretty much that's something I'm gonna always try to preach to people is, once you start taking a couple of losses, don't let it get to you. If anything, take a break from the charts. Go watch a movie, go get some food, go hang out with somebody, or go work out, listen to music, anything that helps you relax. Don't even look at the markets for the rest of the day. Either you go back tomorrow or you go back next week and just try to cool your head up so you don't get too emotional and start putting in more trades just to get back the money you lost. So pretty much that's what I did without fully realizing it. I'm just happy I was able to catch it in time before my account got really bad. It's still kind of bad now, but at least I didn't let it get too overboard. So as we can see in the GJ, I pretty much entered this day, so 2 days ago. So that candlestick right there, as you can see, price went up a lot. It's gone up about 100 pips or so. So it wasn't that I was completely wrong, I was just early in the trade, which is another thing that can be really frustrating in forex. You can see a perfect setup, you can think everything's gonna go perfectly, but you can enter a trade and you could be too early and you get stopped out. I'm gonna be honest, this really pissed me off because I thought I did everything right. The moving averages looked right, the RSI was showing indications of oversold, I saw a triple bottom. Honestly, I probably should have just waited, but it is what it is. You can never predict things like this in forex. So if we go to USD CAD as well, we can see price also dropped as well. I entered, I believe this day, this was the day I entered, and so I just took a break because I took too much losses and I didn't want to take any more losses. But as you can see, price already dropped a ton since then. It's dropped about 300 pips, or even more than that. It's dropped about 600 pips since then. I'm gonna be honest as well, this one got me frustrated, but I see a signal from this trade right now. Right now, what I see is an evening star. If you don't know what an evening star is, I'm gonna put a picture up in the screen. But what an evening star is pretty much a bearish signal, or a signal that the market might start selling. So although I see an evening star, I'm not gonna enter until I see what happens today. So if today ends in a bearish candle like this, I'm gonna sell, and I'm most likely gonna sell to around here because I see a lot of price action movement here, because price usually comes down here. So I'm gonna be looking to sell to there, but that's only if today ends in a bearish day and I see some other signals from my indicator. So if I see other signals from my indicator, like let's say if the RSI dips below the 50 line, and pretty much the 50 line is the one right here. So those little dots, that's pretty much 50% line. So if the RSI dips below that, I might look for a sell, because right now I'm not too confident that this pair might keep going up. The reason why I'm not too confident that this pair might go up is because when you're in an uptrend, you have higher highs and higher lows. So higher high, higher lows, higher high, higher lows, higher high, higher lows. But we haven't broken a higher high yet. So right now I'm not completely sure if the price is going to keep going up or not. So until I see some signals and some movement going up, I'm not going to be entering that trade for a buy. As you can also see for the USD JPY pair. Also, what I have right now is a Fibonacci retracement. What a Fibonacci retracement is a tool that you could use to look at key levels of where price might bounce back off. So this tool is pretty much named after, I forgot what the guy's name is called, but I think his name is called Fibonacci. And the way he finds these numbers and percentage of where price is going to drop is by doing mathematical calculations. So pretty much what I'm really looking at for is the 38%, the 50%, and the 61%. So if it goes as low up to 78%, it doesn't completely mean that the trend is over, but it means that there's a high possibility that the trend might be over. So you usually try to look for between the 38, the 50, and 61. At least that's what I usually try to look for. And as we've seen in previous encounters, when price dropped there, it never went below the 61. So that tells me that the buyers are still in control of the markets, even though we're in a selling trend right now. Not only that, the moving averages, the 200 is still above the 100. The 200 moving average for me is the red one, and the 100 is the blue one. So that still signals for me that we're still in a buy, or the buyers is still in here. And as you can see, the price went up as well. It went up about 100 pips or so. So yeah, so I might sell this depending on what happens. Let me see RSI, what the RSI is saying. So on the daily, the RSI really isn't giving us much, so I'm going to go to the 4 hour and see what's happening over there. Okay, so in the 4 hour, we're approaching overbought territory. So pretty much the RSI is a volatility indicator. So once price reaches the 70%, that means that whatever you're trading is getting to oversold territory, which means there might be too much hype around it and people might start selling the pair. Once it gets to below 30, that could mean that whatever you're trading has been selling way too much, and there might be buyers starting to creep in. So pretty much the 4 hour is showing me that we might be approaching oversold territory. Not only that, but the 200 EMA is above the 100 EMA on this one. So it's showing us that the sellers could still be in the markets right now. Plus, I might just be looking for additional confirmation, but this to me looks like a triple top. If you don't know what a triple top is, I'm gonna put a picture on it right here on the screen. A triple top is pretty much a bearish reversal signal. So just like the last video where I showed you what a triple bottom is, pretty much is the opposite of that. So once these happen, there's a likelihood that whatever you're trading might start to sell. But as always, it's not 100% confirmation. It's just something to go off by. So for GU, this one I might get into for a buy, because right now I see a triple bottom. If you can see it, I'll try and draw a line for you so you could probably see it. So I just drew the circles. Sorry, it's a little crooked, but I see a triple bottom right there. So if today ends in a bullish candlestick, then that would be a bullish engulf. What a bullish engulf is pretty much a candlestick pattern, and that pretty much shows that the buyers are starting to approach whatever you're trading. So if you're not sure what a bullish engulf is, I'm going to put a picture on the screen just to show you what it is. So pretty much if today ends in a bullish day and tomorrow ends in a bullish day, or Monday or Sunday night does, then I might start to buy this pair. But we're just going to have to wait and see. So guys, that's pretty much the trades I'm going to be looking to take for next week, and pretty much what I've learned for this week and what I plan on taking forward. Also, another thing I'm going to start doing is journaling my trades. The reason why I'm going to start doing this is because journaling my trades, I'm going to be writing down my analysis, why I took the trade, and what I see, my take profit. So pretty much a take profit is, let's say you enter here and you think price is gonna keep buying. If you put your take profit here, pretty much what that means is that once price hits that point, your trade is gonna close. So that's pretty much what a take profit is. So I'm gonna put my take profit, my stop loss, and then once the trade is over, I'm gonna write down what happened, the results. If I ended up losing in that trade, I'm gonna write down what happened, why I believe I ended up losing. I'm gonna go back to the analysis, look at where I went wrong, and if I entered the trade on just momentum or I entered the trade with technical analysis, or I was too early. I used to do this before, but I stopped for some reason. I'm not exactly sure why I stopped, but I'm gonna start continuing doing this again. Anyways guys, thank you for watching. If you're new here, don't forget to subscribe, like the video if you like it, and share it to a friend who might need it. Also leave a comment down below on your thoughts, if you have any advice, anything you'd like to share.